What's up? I'm Dan Fredenberg, and this is another Chance Encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Kevin Russell. How you doing today, Kevin?
I'm doing great. Thanks for having me, Dan.
Awesome. It's my pleasure. I got my favorite audience member here. And why is my favorite audience member here? It's because this is a chance encounter where I interview commercial real estate investors. And why do I do that? Well, part of it is because it's the law. But the bigger thing is you need to find the people who are in your industry, find out if there's any overlap, find out if they're a good match for your business. And so that's why I ask them with the Dan Does Deals commercial rolled eye. I say, hey, what's your core competency that you're contributing to your deals? What exactly are you looking for? But that's not too exciting. If you want your copy, that's the real idea, is that way you can learn to effectively communicate on the topic of commercial real estate, which is absolutely important if you're going to get successful in this industry. But before we get to that, Kevin, can you please introduce yourself to the audience?
Absolutely. I'm Kevin Russell. I'm a real estate investor, long-term landlord, been in the game 30 years. I also work professionally in the title insurance industry for commercial real estate, helping insure transfers of land and escrow.
That's a beautiful, beautiful, applicable experience. That's got to be really, really handy. So the first thing that I do in here is I go through the motivations. I found there are 5 different distinct motivations in commercial real estate as far as investors go. And sometimes I'm interviewing newbies on this show, and everybody knows why they're getting involved even before they know what they're actually going to be doing. And so that's why I like to start off with that. The first motivation I found some investors have is they're looking to preserve their purchasing power. Specifically, like family offices and whatnot, what they're up to is they're making ends meet by using the cash flow that comes from the assets they own. So when inflation rears its ugly head, if that sounds familiar right now in 2022, then they're going to have to make more acquisitions, or else inflation will ruin the party. So that's what some people are up to. This is not my highest priority. My biggest one is trading time directly for wealth, as opposed to, I got a background in tech. So that means I'm a high wage earner, and it also means I'm a high income tax payer. And so what crossed my mind is like, well, how can I pivot where I'm doing the accumulation of equity, AKA net worth, without taking that intermediate step of paying a ton of tax? So that's what I'm up to. But the most common answer for people why they're up to all this stuff, they want to fast track their retirement, or at least they want to take control of their time a bit more. Maybe that means fewer weeks per month, maybe it means fewer months per year, maybe it means fewer hours per week, but they want to settle down. They don't want to have somebody else telling them what to do all the time, and they want to back off on the amount of activity they have to do just to make ends meet. But the next 2 groups, they're not like that at all. Like the next one, they're so ambitious, they want to buy their entire hometown. They want that legacy wealth. They want that generational wealth. They want to make sure that their great grandchildren never have to hold a day job. And that's what they're up to. And they're going to be hustling into their 90s, which is also probably true of the next group. The next group, people, they find some group of society, or maybe it's the environment, or it's animals. They want to send people to Mars. Who knows what it is, but they want to make a real impact on some group. And they recognize that you need to have a lot of financial backing if you're going to make that kind of impact. And that's why they're making these acquisitions. So of those 5, Kevin, what combination of those resonates with you the most? What describes you best?
um, I need a memory pill, Dan. Maybe we could recycle those again.
Sure. Yeah. So first one is that you already have the assets, but you're making more acquisitions just because to stave off inflation. Second one is that you want to trade your time for wealth instead of for salary, aka wages. Third one was to retire early or take control of your time. Fourth one is that you're just plain ambitious, and then the fifth one is that you're trying to save the world.
Okay. You know what's funny, Dan, is if I look across all those 5 gamuts, I'd have to say that my personal life reflects all 5 of them. I'm in a little bit of affordable housing right now as a landlord. A couple of my rentals I rent out by the bedroom for people who are on fixed income. Part of me is like a tiger who wants to own the whole town. But the realities of credit and how you leverage, your wealth and your equity come into play, and you realize that sometimes real estate is a get rich slow thing unless you're a genius. And I keep running into these geniuses, and that's why I'm talking to you today, because the whole real estate syndication game is something that's just now on my radar after over 25 years of owning real property and being a landlord. So, but I'd say overall, most of it, I've been, like I said, I've been doing this for a while. Inflation now has me, of course, a little bit scared because I saw the gas lines in the 70s, and my mom in the 70s. My mom was a realtor during that time. I saw her disappointment and the struggle that we had as a family when rates were 16, 17, 18%. Her trying to list brand new homes in Tacoma, Washington was quite a struggle. And so anyhow, I've seen a lot of it. And so a big part of me right now is just preserve what you've worked for, for so long. And then part of me is leverage that. I've got a lot of equity in a couple of properties. I've just now pulled it out. And now we're looking to extend that further. And this is probably my last go. I'm in my 50s. I don't have a lot of time left to be working my butt off. So I really need to be smart about how I place that money and how we kind of ease into the sunset years.
Mm-hmm. Beautiful. So that brings me to my next question. It's a new one in the format, and it has to do with risk. And the question is, if you could name at least one asset or asset class that is popular, but it's too risky for you. Like me, I like to use the example of Air Jordans or Pokemon cards because that's a buy low, sell high move. And in real estate, you can do a lot more, like you can force that appreciation, and you're also doing it because you're getting cash flow instead of just depending on it increasing in value. But what's too risky for you, Kevin?
Right now, buying any more Bitcoin. That's one. I've been in that game since Bitcoin. I bought in at $200 or $300, but it was risky then. Not knowing if I just throwing my money away. I didn't have a lot of disposable income back in 2012, 13. So I also learned a very hard lesson during that time about making hard money loans or buying notes. Okay. So buying junior notes right now is too risky for me. If you got a lot of capital, you can afford to foreclose and pay attorneys and go in and do that, then great. But for me, I got washed out of quite a bit of money on the last downturn. And so a lot of people predicting some interesting times ahead, and who would be foolish enough to ignore, inflation, all-time highs in real estate driven by low interest rates and, unprecedented demand for housing based upon low production, cost of materials, all that factors into a real wild science of scenarios for real estate. And so, I don't even know what was I supposed to answer?
Yeah, no, you answered it. It was Bitcoin, and yeah, it's like even real estate, which is far more reliable. It's not a simple thing, and that's really the main idea. It's just to make sure that people aren't total cowboys and just saying like invest in all the things. I don't care what the numbers are, or I like the cut of your jib, and that's good enough. It's like no, it's not good enough. But
yeah, something that's very applicable right now is we are shopping for a home. And we've been shopping for a short time now, over a year, seriously. And yet, keeping an eye on things for the last 3 years. And Southern California is such a strange market, such a desirable market, but still such an expensive market. And we are torn between just being comfortable with renting for another decade and investing money in other markets versus buying something here at an all-time high and writing that out.
Yeah, yep, exactly. It's definitely a good call. But let's talk about the commercial roles here. And once again, if you want your own copy of the dandoesdeals.com commercial roll die, you just go to dandoesdeals.com. I don't even ask for your email address, which is a really, really bad idea, especially from a marketing perspective. But I want you to be able to print this out, show it to your family, show it to your friends, and get accomplished at communicating effectively on commercial real estate as a topic. So let's go through these different roles here. First role is the repositioner. They're looking at a whole bunch of different properties because they are the acquisitions people. So what are they looking at? What's on this paper that they're all checking out? Well, the first thing they're doing, there's a fancy word for it. It's called underwriting. And what that means is they're doing the math. They're doing the arithmetic. They're saying, first of all, is this property even making as much money as the seller claims it is? That's a pretty important thing to know. But they're called repositioners. It's not the most common term for it, but they're called repositioners because they're thinking, how can I change it to reposition the property? What changes can I make to get more upside? And there are three main tools in their tool belt that they can find upside. The first one is more advantageous lending. That's pretty straightforward. But usually people think of more efficient operations, AKA cost cutting. They stop those Benjamins from going down the toilet, but there's more to operations than just unclogging toilets and mowing lawns and accepting rents and all that kind of fun stuff. There's also a marketing aspect, which is one of my fortes that I contribute to my teams. Things like building actual online funnels for making acquisitions, but also making sure that those vacancy rates are low, 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 low. And the one problem with operations as a means for upside is that things are so hot right now. It's probably not enough. And often the repositioner needs a contractor team to do the renovations, do the value add, make the place nicer. And then that way tenants will pay more in rent with a smile on their face. That's pure upside. But even if you have a great operator team and a great contractor team, if you're from the internet like me, you're going to need a local. Okay, you're going to need boots on the ground, somebody who can be there in an hour or two. And that's not going to be me because I'd have to get my passport and go through, deal with the airlines and all kinds of hassle like that. So you need somebody to be watching and making sure that the operations people are doing what they're saying they are, and make sure the contractors are keeping to schedule and all that kind of fun stuff. And those four, they seem like the owners, but of course the financiers are also involved, the banks, the fund managers, all that kind of stuff. The money people, you know, the repositioner is going to be turning around and say, hey, I need this building. I want to buy this building that's worth tens of millions of dollars. So you don't have to have, say, tens of millions of dollars, do you, to lend me for this? And the financier, they'll look at the deal and they'll look at the team and they'll say, okay, but there's one thing you haven't told me yet. And some coaches, they won't talk about this. It's who's your KP? Who's your sponsor? And what's that all about? Well, if you want to be eligible for the loan, you need somebody in the fold who already owns a similar asset. So even if you're Jeff Bezos or Elon Musk, if you want to buy even like, let's say it's a 350 unit apartment complex, if you want to be eligible for the loan, you need somebody in the fold who already owns a similar asset. On top of that, you need a certain amount of liquidity and you need a balance sheet of at least the amount of the loan. But if you have all of those pieces, you've got yourself a commercial real estate deal. So Kevin, as far as your core competencies, like you working for a title company, that has to be fantastic for due diligence purposes and different things like that. But what are you generally looking to contribute to your GP team on your next deals?
I could serve as a potential general partner, but I've got a general lack of experience in syndication. So I wouldn't feel comfortable right now just stepping out and doing it. I'd want to team up with some other partners and do it together. So one, capital. I have capital, not a lot, but I've managed to position myself well on some equity, and I've now pulling that equity out of some properties and putting it to work. Kind of the Burr method, right? Buy, remodel, rent, refinance, and repeat. So, you know, kind of following that philosophy and writing the market up now, we've pulled up, 70, 80% of equity out and looking to deploy that. From an expertise standpoint, I'm a former general contractor, former electrical contractor, and worked for the world's largest roofing company. So I've got a lot of construction knowledge. My father was a contractor. My brother's a contractor. I've got an assortment of nail guns and chop saws and everything else. I know construction. There's places where I'm weak. Don't ask me to be a plumber. I'll admit to my weaknesses. But when it comes to finding deals, originating deals, former business owner, I understand spreadsheets, profit and loss, net income, when somebody fudging, if it's a rundown apartment complex and they're claiming a, 98% occupancy, I got to look through this a little bit to find out what's going on. And so general partner, construction knowledge, a little bit of money. I think that I make probably a good person to come in as a team member on a project and, make it win.
Yeah, and you're clearly modest as well, because like that sounded like that's a fantastic addition to the team. So my next question, it has to do with your ideal property or your buy box. And so when commercial investors are talking to each other saying, hey, like what exactly are you looking for? I like to say there's 3.5 parts. The first one is geography. Where is the property? So what states, what counties, what neighborhoods, it can all matter. Okay, so that's the big one. Location, 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 which really means how much foot traffic and car traffic is nearby. The second one, we're talking about multifamily here, so it's unit count, okay? With multifamily or retail or self-storage or mobile home parks, the unit count is going to be what they're going to be asking about. If it's industrial or if it's warehousing, it's going to be square footage, but you're going to need to know that for the size of the deal. And then the third and the 3.5 ones, they're both called class, and class has 2 different meanings. The first one is the condition of the building. So how old is it? Is it beat up or is it brand new, and is it immaculate? Okay. And then the other meaning of class, it has to do with the neighborhood that it's in. So what's the crime rate like? What kind of school districts is this property in? So the way that they rate those classes, both of them use the same rating systems. It's just like in grade school where it's like C-, B+, A-, all that sort of stuff. That's how that works. So Kevin, as far as properties that are easier to say yes to, more difficult to say no to, what you looking for?
Well, coming from the Seattle market and living now in Southern California, Newport Beach, Costa Mesa, Irvine, I can tell you that I want to be out of a highly regulated state. I've been heavily impacted as a landlord, owed thousands and thousands of dollars, months and months of rent, all with my handcuffs on, not being able to really do anything about it. So I want the government out of my business relationships with my tenants. Okay. If you can't pay, you got to find something else to do, or we got to get you help. But a lot of these people are even unmotivated to get help. So this could be an entire episode on its own. So get me into a state where there's less regulation. I have a little bit more power as a landlord to work with people. I'm pretty good. I'm a saint when it comes to, I don't even issue people a late notice until the 15th. So, a lot of things I do as a landlord are probably shameful in some business circles because I'm too lax. But the truth is I want the government out. So get me into, maybe the Southeast, maybe Texas, Arizona. I'm looking at Georgia right now. There's a lot of good things happening around Savannah with electric car plants. So I'm looking at, I'm a value buyer. I'm not afraid of ugly. I bought a boarded up building 2 years ago for a really good deal. Got some owner financing on it because it certainly wouldn't appraise and finance. So we're still working on that project. You got to be careful when you buy a fixer, because there's sometimes, especially if you're going to change the use, you're going to take an old office building, convert it to residential or something, be really careful there. But overall, I'm thinking, a red state. I'm thinking value add, maybe an unattentive owner. There's some things to fix up. I'm talking a little bit more than lipstick. Maybe it needs new water lines throughout a trailer park. Maybe it's even got a failing septic or something. We actually get a really good deal on it. We get a good contractor. We come in there, value add. A little bit of lipstick never hurts, and then room to grow. So either we got some tenant issues, we got some vacancies, but it's in a decent area. Certainly don't want to buy in a bad area. Don't want to buy, historically problematic property. I don't need those challenges. So I definitely want something that's growing, up and coming, trending in the right direction.
And as far as unit count, those sorts of size, like, you got any preferences?
Well, I'm traditionally just a single family duplex triplex investor. And so I'm just now biting off more. I want to get into, I mean, I wouldn't mind going into a 12 to 20 unit,
Hmm.
going as a limited partner there or do that on my own. I
Hmm.
wouldn't mind looking at 100 to 200 unit, but if we're talking, a 1,000 unit building, I really want to carefully dissect all the paperwork, make sure that usually scale brings better income and opportunities, but I haven't been in the game long enough with syndications to know that. Each
Hmm.
individual has to be looked at individually. But right now, I'm looking at trailer parks. Trailer parks, RV parks bring a higher cap rate in a lot of deals, and so
Hmm.
I'm not scared of a couple ugly trailers. Throw some silicone on the roof, and or even better yet, get a park which everybody owns their own trailer.
Yeah, beautiful. And I love what you were saying about being a landlord. The way I like to sum it up is like who really owns what you buy as a landlord if there are too many government controls. It's like if the government wants the property, they can keep it. It's just like, but like they shouldn't even be selling it if they're going to be telling you what to do with it all the time, even at the expense of your entire livelihood. But that's neither here nor there. That's more political than we probably intended. But the next question, fortunately, you're not in any syndications right this second. You're not doing any 506Bs, so that means you can say whatever you want. But one of my favorite things about commercial real estate is that because it's multifaceted, because there are all these different roles, and they are being done by different people or even different teams, everybody is well suited to help each other, but we're also better suited to help some more than others. Me personally, because of my marketing and tech background, I'm best suited for the sponsors and KPs. I can help them because they already have a foundation that I can build upon, and starting from zero is tough regardless of how good you are at this stuff. So that's who I'm always looking for. A lot of investors are always looking, or syndicators anyway, they're looking for beginners because they want to help people get started. But Kevin, who are you best suited to help disproportionately? Who do you want to reach out to you?
As far as other sponsors,
Mhm.
people that everybody, there's a lot of money floating around. All right,
Mhm.
so there's a ton of money out there. I think that having a mind join the team like mine, it would be beneficial, more beneficial than just straight up money. Although
Mhm.
I want to be an equity partner, there's no reward unless you're putting in money.
Mhm.
But perhaps the team needs to fly to the site and let's look at the electrical panels. Is it worth to upgrade the electrical panels in these units, or do we leave it as is?
Mhm.
Um, Vinyl plank flooring. My wife works in the luxury countertop space, but they sell everything from straight quartz to natural stone to new product called Dectin.
Mhm.
So, what do we do about the countertops in this situation? Lighting and finishes and stuff like that.
Mhm.
So I think I'm a good general mind for value add projects.
Mhm.
Um, because I don't have millions of cash set aside to be a big player in that space, I'd
Mhm.
have to come in and add some value elsewise.
Yeah, I love that you mentioned like the fuse boxes and stuff like that. And with the increase in values, it's also made the insurance costs go up, 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 up. So that's one thing I've heard in Texas. Perhaps is there some electrical boxes that are prone to fires, and so just getting insurance is a hassle. Even though right now it's not the easiest thing anyway. So that's really great. But my next question has to be, how do people reach out to you? What we ended up meeting through some meetups and LinkedIn. What's the best way to reach out?
Absolutely. Yeah, a myriad of ways. You can always contact me on LinkedIn. Just search for Kevin Russell. That's Russell, and type in Commonwealth behind it, and you'll find me on LinkedIn. Or just contact me direct. I very happily accepting professional inquiries, investment inquiries, and of course, anything to do with title insurance on a deal or escrow closings. Definitely want to hold my hand out there as a partner to help. And that's 949 379 4469 or kevin.russell@cltic.com. It's Commonwealth Land Title Insurance Company.com.
All right, beautiful. And the only thing left is actually, it's not for you, Kevin. It's actually for you in the audience, which I need to tell you about this campaign I'm having. It's called the Kill All the Ugly Red Buttons campaign. And if you look under my left hand, you'll notice a big, ugly red button. And I hate them. They're terrible. And the only way to get rid of that awful button is you just click on it, and it costs you nothing, which is really, really cool. And it turns into the gray button of tranquility. And the magical power that the gray button of tranquility has is it means that YouTube will start paying for these videos instead of me. And it costs you nothing. As I said, you don't need any email address or credit cards or any of that silliness. All it means is that my videos might show up on your list of suggestions, but you don't even have to watch those. I'm just really appreciative that you even watched this. And I am super duper appreciative that you came here and we learned more about each other. Kevin, this has been really awesome.
I'm appreciative too, Dan. I hope that we can work a deal together.
Awesome. Sounds good. Let's do it.
All right.
Hey, thanks for watching this episode of Chance Encounters. Make sure you do 506 Me after this. And the way that that works for you, if you want to be a 506 Me member, if you're at a live event, a conference, or in a Zoom call or something like that, all you have to do is have your very own QR code that comes when you sign up. And then if somebody has their own QR code scanner, just like this, then my one has it in its phone automatically, so I can scan even faces and stuff. But you just scan the code just like that, and then it'll add you to their watch list. So that way you can they can watch your video, make sure that you're compliant, know your level of sophistication, and all that kind of fun stuff that the SEC wants us to do. Anyway, thanks for watching. Make sure you subscribe. Thanks a lot. Bye.